Good afternoon. Today is Monday, December 20th, 2010, and the market's closed here. The S&P 500 did finish 30 cents higher as measured by the spiders here. You can see that we continue to remain above this prior resistance at 123 area, and this little support in here really at 123.80. So I think going forward, those are two important levels to keep an eye on, 123.80 and then 123 below that. If we can continue to maintain above that level, I think it's generally going to remain bullish throughout the end of the year. We are seeing the volume dry up here a little bit. Stay focused on price action. There's still a lot of good price action in the market. Near term, we have a little bit of resistance at 125. We push up through that. Then we have the year highs right at about 125 and a quarter. And obviously pushing up through that level would bring us to levels that we need to take a look at on the weekly time frame. And I think that you'd be looking at about 126.20 or so from the 2008 first quarter lows. So the market continues to be strong, and the path of least resistance obviously is higher for the Nasdaq as well. We've seen that this market has been consolidating through time above this prior resistance level at 54 bucks a share. That consistent or not consistent, but that correction through time here, and let's just change the scaling so we can see it a little bit more clearly. You can see 53.80 really is the more important level, 53.80 to 54, the important level that we need to hold above for this market to remain healthy. Unless we break below that, I don't think there's really much to worry about. Pushing up through about $54.80 would then put this market in a position to go challenge those highs from late 2008 at 55.07. I've said it for a couple months that I thought we were going to get there before the end of the year. I still think this market will be able to do that, and shorter term, we have these higher lows here on the 30-minute time frame. So the market remains healthy. Obviously, the name of the game is to ride your winners and manage risk and look for new low-risk setups that present themselves. The semiconductors are also consolidating here a little bit above this rising 20-day moving average in the trend line, the 10-minute time frame. We can see that we've had a little bit of a correction here with these lower highs and lower lows. We got above the declining 5-day moving average on Friday, and I was hoping that we would get a pullback from this level, make a higher low, and then be able to push through right now probably about 32.75. I think getting back above 32.75, you see another push for the highs that we had seen this year in the semiconductors, and then from there we would be looking at, I think, these two little peaks near about 34 bucks a share from late 2008 and mid 2008 and late 2007. So the semiconductors are still bullish. They're longer term, near term, they're probably a little bit more neutral than anything. If they broke 32.20, then I think you would want to become a little bit more defensive, and then perhaps we'd see a movement down towards 31.80. But breaking that 20-day moving average could bring about some unexpected profit taking as well. So it would be worth noting just because we've been riding that 20-day moving average and holding above it. So for such a good period of time off those September lows. The financials are holding on to the bulk of their gains here as they've just pulled back very shallow from this move that started late November. Shallow pullback. It's now kind of correcting through time above that rising 10-day moving average. On the shorter term time frame, we see that we have this little pattern of lower highs and lower lows on the financials. And now what we would like to see in here, I think, would probably be a move above this high at 1567 or so. Maybe a little bit of a pullback and then a push up through that level. If we can get up through 1570, I think with a stop down near 1540, that this market would then likely be headed for a test of the post-flash crash highs. This is really one of the only markets that hasn't tested that level, and it's up near about $16.14. So overall, we still have a strong market. Even the home builders are continuing to add to their gains a little bit, so that's worth noting as well. But anyways, that'll do it for now. Thanks for tuning in.